And a look at the state capitol, where a number of new laws were adopted this month that aim to stabilize the home insurance market before and after a major catastrophe. John Ramos has that story.
Unless you paid cash or own your home outright, property insurance isn't an option. It's required to maintain a mortgage. And that makes California's insurance crisis a universal problem, and one the legislature is getting very involved with. Marin County has probably been more proactive about cutting wildfire risk than anywhere else in the Bay Area. Central Marin Fire Chief Todd Lando says many homeowners are doing what they can to remove fuels around their homes, but that doesn't always come cheap.
It's taken years of education and efforts to get outreach into the communities to help people understand what their real vulnerabilities are, especially in zone 0. The first 5 feet around the house plays a big role. And sometimes, depending on what your property looks like, it could be a big expense. You may need to hire professionals.
So the governor just signed Assembly Bill 888, which establishes a grant program to help low and middle income homeowners in high fire risk areas to pay to remove flammable vegetation and install more fire-resistant roofs and materials on homes. And it's not just about safety, it's also about insurability. Another new law addresses how victims of wildfire are paid by their insurance companies. Currently, insurers of homes lost in declared disasters will only get 30% of their policy limits unless homeowners supply a complete list of all that was lost.
Rebuilding after a total loss is overwhelming. People are forced to remember every toothbrush, pan, pair of shoes. It adds needless pain to an already traumatic experience.
Senate Bill 495 tried to stop that by requiring insurers to pay 100% of a policy's limits on personal property loss without itemizing the possessions.
In the process in the legislature, the insurance industry whittled that down. So the bill, as it was signed by the governor last week, is 60% of that personal property coverage will be paid without that itemized list. But it still improves the situation for consumers who are being asked to itemize things in the wake of a fire and re-traumatize themselves.
With many insurers drawing back from the market, many homeowners have been forced into the California FAIR Plan. It was meant to be the insurer of last resort, but has now grown to become the second largest policy writer in the state.
But the FAIR Plan was not designed to absorb the number of policyholders at the current rate. This came to a head in February when the FAIR Plan requested financial assistance from its member companies to ensure claims continue to be paid from the Palisades and Eaton fires. This measure provides the FAIR Plan additional resources to ensure they have adequate claims paying capacity.
AB 226 helps stabilize the FAIR Plan by issuing state-backed bonds and lines of credit so insurance companies can spread out over time any bailouts of the FAIR Plan that may be necessary following a major disaster. Finally, SB 429 will begin the process of creating a statewide wildfire risk model generated by public universities, so future pricing decisions won't be relying solely on private insurance company data, usually shrouded in secrecy. There may not be a lot of trust in the insurance industry right now, but Battalion Chief Lando says we can't really avoid the relationship.
We want insurance. We need someone to provide it. I think we need to do everything we can to make sure we can all keep it.
A law was passed that would have banned flammable materials within 5 feet of structures starting in 2023, but that too has been held up. Governor Newsom has now directed officials to finalize the so-called Zone 0 rules by the end of this year. Brian?